Pleasure to be here. And it's just the usual. Thank you for joining the call tonight. And I want to almost kind of, I won't use the word warn you, but inform you earlier that this session is going to be interactive because it's a financial session. And so basically what I will do is I will dive in between the slides, but I will need you to write stuff down, like take notes, because what I will do is I'm going to call people randomly and then ask them questions, what they've learned, and all of these other things. So please take some notes because I would definitely question you on it. So yeah, tonight's session is one of the, I would say, key blocks in entrepreneurship, pretty much talking about finance. And believe it or not, finance is something that most entrepreneurs tend to want to stay away from because anytime we think about finance, we think accounting, which are two different things. But you will see what we go through today, and then you think, oh, okay, so really it's not as complicated as I thought it would be because accounting is complicated, whereas finance isn't. And yeah, so it's trying to get you around that thought process. And hopefully you would then not feel afraid, so to speak, in quotes, when you engage an accountant and ask the right questions. But at the basic level, as an entrepreneur, those things that you need to know so that it builds your confidence as you go along. So I'm going to share my screen. And if you have a pen and paper at hand, we're going to first do an icebreaker. And then we would jump in. So let me share my screen. Okay. Great. See, so this is basic financial literacy for entrepreneurs. So master your money and build your business. That's pretty much the aim of what tonight is going to be. And, I'm learning French, or I think I am. So I'm trying to replace a lot of the English words with French words as I go along. So again, that's probably some languages that we have to learn. And I will encourage a lot of you entrepreneurs to learn a new language. Particularly the fact that Ghana is surrounded by French-speaking countries, but we only tend to speak just one language, which is English. I would say learn a new language, whether it's French, German, or whatever the case is, or even Arabic or Swahili or whatever. Learn a new language because it would help you. But that's just my personal, plea to you. So once again, welcome. My name is Josiah. Like yourself, I'm an entrepreneur, I'm a coach, and also like to advocate when it comes to using innovation in the ways to empower startups in Ghana and across Africa generally. I work with a lot of entrepreneurs in terms of leadership and building impact through strategic programs and coaching, and that I work with them on. And over time, I've built some frameworks that I would love to work with you on and share with you as well and help you build your businesses. So this is who I am and looking forward to engaging you over time. So the overview for tonight's session is ideally the takeaway that I want you to take away from here is just understanding the basic fundamentals of financial management for small businesses. And then it's about learning how to differentiate between your revenue, your profit and expenses and everything that goes with it. And generally gain a practical skill in budgeting and why we need to manage our cash flow. So yeah, like I said, it's going to be very interactive. So I would definitely be calling on people to, ask them what they've learned and all of those other things. So it's almost like a school session. So please, get a pen and paper. I'm going to call people randomly. See, so it's not a case of, it might not be me because it could be you. Now, the first thing I'm going to do is an icebreaker. Okay. I need everybody to write in the chat, the message thing, one word that comes to mind when you think about financial. So what one word do you associate with financial? The moment you think somebody mentions the word financial, what do you think of? What is the one word that you think of? So I'm going to give you 30 seconds to think about it and then write it in the chat group. Okay, I can see it going money, l'argent. I like that. I like that. Everybody's saying money, 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 investments, wealth. Okay. Okay, interesting. So yeah, I mean, again, these are the words that associate itself with financial. So most of the time when people think about financial, you know, this is what we think about. But then in terms of business, then you need to start thinking about things like clarity, freedom, credibility. There's so many words that you can go with financial when it comes to that. Can somebody unmute and let me know if they can see my screen because I came off it and came back on, but just to be sure.
Yeah, we can see.
You can see.
Okay, great. See, so these words that you put out again, and I'm glad that nobody said anything to do with fear or dread or cannot do or anything. So it's at least you've associated that when it comes to financials, we're talking about money. But sometimes also when we think about financials, we need to think about structure. We need to think about systems, right? And then everything else that goes with it, we need to think about management. Those are the kind of things that comes with it, words like budget and all of these other things. But again, as we've been entrepreneurs, when we think about financials, then we think money. So, we're on a good path, really. So I will start by saying, what is financial literacy, right? So I'll play a video real quick, then we can talk about it.
Financial literacy is knowing how to manage money. To manage money means to spend less than you earn and save the rest. It also means to know how to borrow money and pay it back. Financial literacy is important because it helps you make good decisions about money. If you don't know how to manage money, you might spend too much and not save any. If that happens, you won't have money in the future. Financial literacy education can help you make good decisions about money.
Right. So like I said, it's a short video. And the whole idea is now you see that financial literacy is just more than just money. It involves knowing how to invest, knowing how to budget, and it's also talking about borrowing and then you earn it, right? So this knowledge then kind of involves different concepts ranging from cash flow management, debt itself, interest rates, credit, investment, and financial planning. So all of these things, when you do business, you need to know your financial literacy, your personal money and your business money. Make sure you do not let either one cross each other in any shape or form. But how can you avoid that? So for most entrepreneurs, financial literacy is a crucial thing for maintaining your ability to be profitable, managing risk, securing funding, and then making strategic decisions when it comes to your business. Hence why I asked you about the one word that comes with. So you realize that financial literacy is about so many different things. And the key element that I want anybody to take away from here is the fact that it allows you or enables you to make strategic business decisions that will lead to a long-term success. And I'm going to read that again. Financial literacy enables you or allows you as an entrepreneur to make strategic business decisions that would lead to your long-term success. So that's what financial literacy is, literally knowing any and everything about your business in its financial state in terms of how you earn money, how you save money, how you invest money, the budgeting that you have to do, and then when you need to borrow money. But management is also part of it, and then investment and all of those things are part of financial literacy. So why is it an essential thing for entrepreneurs to know? Again, clarity enables better decision-making for business growth. Safeguard, because it helps avoid financial pitfalls like overspending or mismanaging your cash flow. I mean, it allows you to know that your business is viable because then it supports any sustainable operations by ensuring that it's profitable, okay? Then credibility. It builds confidence when seeking investments or loans. Now, a lot of us, when we are thinking about investment or loans, We don't even know whether we have money or we don't have money, what we use the money for, where it's going to. So when they ask you these kind of questions, you're not able to answer them, right? And if you don't have your documents and everything in place, then it eats into your credibility. So sometimes it's not like the bank doesn't want to give you money, right? It's just the fact that you're not credible. You don't have records. So it doesn't build confidence in them to be able to then give you the money that you're looking for. So you have to think again in that aspect that, again, financial literacy here is seeking clarity, is for safeguarding, making sure to let you know that your business is viable, and then also adds to credibility. Above all things, this is the reason why it's very essential for entrepreneurs to know what financial literacy is. Now we're going to look at financial management, right? So literacy is having the knowledge of something and why you do the thing that you do. So your understanding of it. So financial literacy literally is just your understanding of finance, what you need the finance for. Now we look at what financial management is, okay? And again, over the time, I'll be playing shorter videos. So for kind of the visuals, hopefully get you to understand, because some people are editorial learners and other people are visual learners. So bear with me.
If you don't have control over your finances, you don't have control of your business or the fate of your business. Financial management deploys funds optimally towards hiring talent, paying suppliers, investing in R&D, and other initiatives that will drive profitable customer acquisition and retention. Effective financial management can help your business operate smoothly without running out of cash, improve profitability, and prepare for long-term sustainable growth.
Right. See, so now we know the financial management is a strategic planning, organizing, and directing your financial resources, right, to achieve your business goals, and then ensure that you're financially stable. So the key element here is business goals and your financial stability. So already by now, you should be writing down your business goals, right? And then in that, you will see whether you have money to achieve those goals. And if you do, how would you be able to budget to ensure that you're stable, right? So this is what the management part of finance comes in. So for entrepreneurs, effective financial management is key to maintaining a healthy cash flow, enables you to optimize your expenses, and then securing funding, then also driving growth while maximizing your financial difficulties and everything else, right? So let me pause there and then come back and then ask you questions again. Hold on. So let me see who I can pick to ask the questions. I could pick, let me see. Pearl, I think it's Susu, I think.
Hello,
Yeah, hi. How are you?
I'm good.
Great. So you tell me 3 key things that you picked up between the two things with financial literacy and management.
Okay, so financial literacy is about acquiring knowledge on how to make investments, and then getting the understanding, management, and earning, savings, investments, budgeting, and borrowing. But when it comes to financial management, it talks about aligning your goals to your business, your financial growth.
Excellent. Well done. See, so as a proud teacher, I'm glad you were paying attention. So let me think. Let me pick another person. I'll pick Hawa Halassan. Hawa Halassan, I think. Are you there? Even if you can't speak, you can type in the thing. Okay, Sylvia said the audio was not clear. Sylvia, let me know with thumbs up if the audio is clear now.
No, I can hear you perfectly, but then the audio from the video was what was not clear.
Okay. But
Thank
okay, great. So once I share the slides with you guys, hopefully it will be better on your side.
Okay, thank you.
Thank you. Welcome. Okay. So I think Hawa is dodging. So I'll pick Martha. So the first session, I'm only going to pick ladies and then jump in. So Sylvia, since I heard you clearly, okay, is Martha speaking? Yeah, hi Martha, how are you?
I'm good. Good evening.
Good evening.
Yeah, so I picked from the financial literacy, that the main thing is showing your credibility in terms of your business. So not necessarily that you have money in the bank, but that you have documents to back that you are credible to assess a loan facility or something. So that's one thing I heard. And then management, the financial management is about planning to achieve planning and budgeting so that you can achieve your business goals. Yeah, so that's what I learned.
Okay, that's great. So I will continue, and then thank you for the feedback, and keep writing the notes down because I'll keep calling people randomly. So now that we understand or have a basic understanding of what the management is, and the fact that we know that it's aligned, you need to align that with your business goals, that it hopefully then ensures your financial stability. Then we know that it's important that your business goals is something that you need to have. And then on the money side, also have the money to ensure that you're stable, right? It allows you to do the risk management and all of these other things. So that's great that we understand what the management side of the finance is. So yeah, the importance of financial management is it gives you financial control and stability. So it helps you track your income and expenses and preventing any overspending that you may have or you may intend to participate in. It will help you then improve your cash flow management, so allows better planning for your incoming and outgoing of your cash. Profitability and cash management, profitability and cost management. So identifying areas where expenses can be optimized, like the challenges in that sense. So where can we optimize expenditure and, take control of it? So cost management is one of those things that financial management allows you or enables you to do. It also helps you with better decision-making, right? And in terms of, it provides a clear financial insights to making informed business decisions, right? Now, if you think about it, if you want to make a business decision, like you want to hire new staff or create a new feature or buy new products or travel or train your people, by having that clear financial management idea, it helps you make that better decision making, right? And then aligns with business goals with financial planning. So helps sets realistic financial goals, and then you're able to track the progress in when you do that. Then we look at how financial management also supports investment and funding opportunities. So investors and lenders require financial clarity before, funding a business. So they need to know whether, your records make sense, if this business makes sense. Because sometimes you'll find that you are making money, but you're not making profit, or you're even running at a loss. But the fact that you have records that shows us there's a possibility that you can make, profit over time, it encourages people, right? Because they need to require these documents so that they can then see clarity before funding you. So that's something that you have to put in mind. So it's not always the fact that you, I would say profitable. It's just the fact that you have documents that you can show that you have something. They need that financial clarity. So it's something that you have to think of. Now, tools are important to use, right? Then with these tools, again, it enables you to then be able to track your finances. Some of you that don't have accountants, or you don't know how to do it yourself. Nowadays, there's so many digitized versions or tools that you can use. The then is literally income and expenses tracker. There's monthly profit and loss statements, cash flow projection sheets, and then break-even analysis calculators. These are all tools that exist that you can use, right? But I'm going to play a video that will tell you other tools that you can potentially use for these things.
So 5 financial management tools every startup owner should know. Number 1, Xero. Xero is all-in-one accounting software. Number 2, Expensify. You can track your startup expenses like cash in and out with this. Number 3, Plan Guru. It's used for budgeting. Number 4, Approve.com. And number 5, FreshBooks. It's used for billing and payments. But you don't need to do all of this. You need to focus on growing your business and let Easy Office handle your accounting. If you want to be tension-free from account management, call us at this number.
So again, literally, they advertising their brand to you. But as you see, there's so many tools out there that allows you or enables you as an entrepreneur to then manage your finances without having to get the technical skills in terms of being an accountant. And if there's any accountant here, I'm not trying to get you out of job, because you will see that over time, we will talk about, you know, the income statements and all of those are things that you will require an accountant for. But in terms of budgeting and knowing your profit and loss and, you know, expenses and, you know, revenue and income and all of these things, you can just use simple tools to do that for you. But when it comes to accounts, the auditing of your records and everything else, when you need to do income statements and, you know balance sheets and everything else, and, you know, learning a lot about your equity and liability and all of these other things, that's when you need to speak to an accountant. So hence why I said accounting and finance are 2 different things. So if there's any accountant here, please forgive me. I'm not trying to get you out of job, but for my entrepreneurs, you can just use some of these basic tools that are available right now for these things to happen. So some of the other tools that I can also recommend will be Wave, which is free invoicing and accounting. QuickBooks, again, it's a comprehensive accounting software, so you can do so many things with it. You can, you know, create invoices, send invoices, track invoices, even pay your salaries and all of these other things with QuickBooks. So, and then when you got Soho, Books, affordable accounting solution for small businesses, you can use that. And, you know, our ever reliable friend, which is the Google Sheets and Excel, that helps you create budgets easily. And then you're able to track these things. And then Mint, where it also helps you with your personal finance management, that can then enable you to separate your business from your personal expenses. And I'm going to repeat this again. If you're one of those people who is still, you know, mixing your personal finance with your business finance, please use a Mint that will help you separate your, you know, business finance or business expenses from your personal expenses. So that's something that you need to think about. So now let's see. I'm gonna just ask some questions. Let me ask some questions. Hold on a second. So Sylvia, okay, Sylvia's put, and before I speak, because I do consultancy and everything else, the most interactive people or those that ask questions after the sessions, I would personally do a 30 minutes free consultations for you, so I don't charge you for it. So that is something that is an incentive as well, because I normally charge on my consultations. But if you put your hands up and ask questions and very interactive and you have a business, I will do a free consultation for you. So yeah, Sylvia.
Okay, thank you very much. I appreciate the list of tools we can also use here. However, I wanted to find out if OZE doesn't count in this instance.
It does, 100%. It does. OZE counts 100%. And thank you for bringing it up, because I'm sure the founders would think being an African brand, why didn't I mention it? So that's my apologies on that. But yeah, it does. It's one of the tools that is helping entrepreneurs at the moment. So if you have access to it, use it. If you don't, also I think it's OZE that you can use. It's a great tool. Use it, and it helps you manage your finances and everything else. And it's one of those tools that is localized, so they understand the local dynamics of entrepreneurs. So yeah. So Sylvia, thanks for bringing that up.
Okay, thank you.
You're welcome. So I would pick. Let me pick Bridget. Bridget, are you there?
Yes, please.
Cool. So, what did you learn about the tool?
Okay. So I learned that Mint is an app that can help you separate your personal finance from your business finance. And then some of the tools that the approve.com, the fresh boot can help you manage your finance.
Great, thank you. And Robert Donko, are you there? Yeah, I think Robert just typed in Oze. So, Robert, tell me what you use Oze for.
It's used for, hello.
Yes, I can hear you.
It's an accounting tool, and it's used for financial planning, budgeting, and stuff like that.
And have you used it yourself?
Come again?
Have you used it yourself, or you know somebody that's used it?
I use it myself.
Okay, that's great. I'm glad that somebody is using the tools already. So yeah, so last question, because I'm picking 3 people. Let me pick Michael.
Okay, thank you very much. I was going to talk. I also use Uzi, and it's very helpful in financial planning. Also helps you to track your business, your sales, and your revenue as well. So that is on Uzi. With today's class, I'm learning some importance of financial management. You mentioned that it helps in proper management, because we know that money is very important in running a business. So if you're able to plan your financial aspect of the business very well, that means that you're going to be able to manage things in the business very well. As again, it helps to also increase profitability and then reduce costs. Also, it helps you to be able to put plans in place to increase your cash flow, and then it helps in proper decision making. Sometimes you are in the middle of 2 decisions, as to whether to pay this supplier first, or to do this or to do that. So if you have your finances at the finger tips, you know how to be able to maneuver through to be able to make the business move ahead. So lastly, I think one thing that is also very important to me is helping to get investment and also investors on board, since investors need financial clarity to be able to even be interested in your business. So I've learned all these from today's class. Thank you.
Thank you, Michael. Della said she wants to ask the question.
Yeah, hello.
Yeah, hi, Della.
Good evening. Hello.
Yes, I can hear you.
Please, I'm Dela. I'm a new member for iSpace. I've just learned a lot about financial management, and finance, how to manage your money. But through management, I think we should start with the basic. When it comes to finance, we should start with the basic, the needs, the wants, the needs and the wants, and how to manage it, how to manage it financially through credibility, profitable, profitability, how do you say profit?
Profitability, yeah, don't worry.
Yes, and decision making is through all the decision making through a strategic plan of financial management. You get it?
Yeah, and I think you're right. I mean, 100% right, because your needs and your wants usually comes in the budget side. So we will even touch on it in the budget side, because in the budget is what you budget for, what you need, what you want, whether you have the money for it, and if I can afford it. If I can afford it, then if I make revenue, then I will know whether I'm profitable or not. So in the budget side is everything that you talked about is where we're going to talk. Thank you for bringing.
Yeah, welcome.
So let me go back to the slide. Good. I think one of the people said they wanted to see the previous slide. So I'm guessing is this particular one where it's looking at the waves, is looking at QuickBooks, is looking at Soho, then is looking at Google Sheets and Excel and then Mint, right? So I hope you've captured this side. But again, if you miss anything, don't worry. We'll share the slides anyways. So, and you can always reach out to me and then we'll carry on from there. Now, this is the bit that I was talking about. So why budgeting matters, it helps you to track your expenses, plan for your growth, and avoid any unnecessary debt, right? So simple budget components would be your income, expected revenue from your sales, fixed costs, reoccurring business expenses, and then variable costs that always go up and down, a bit like our emotions. That's pretty much what variable costs would be. And then emergency funds, a buffer for unexpected expenses. So quick video, brief video on it. And I understand the audio is not very clear on your sides, but again, for the interest of the presentation, when I send the slides, everything will be in it, so you'll be able to watch the videos as well.
Are you an entrepreneur struggling to manage cash flow? Let's break down budgeting basics in just 60 seconds. Budgeting is the backbone of a successful business. It helps you track income, control expenses, and plan for growth. Step 1, list all your income sources and expenses. Knowing exactly what comes in and goes out is key to smart financial decisions. Step 2, allocate your funds wisely. Prioritize essential expenses, invest in growth, and set aside savings for emergencies. Step 3, review and adjust your budget regularly. Real-life performance may vary. Stay flexible and tweak your plan as needed. Bonus tip, use budgeting apps or software to automate tracking and keep your finances organized. That's your quick guide to budgeting for entrepreneurs. Like, subscribe and share your own budgeting tips in the comments.
Great. So we know that budgeting is just more than just putting figures down, right? Because it allows you to plan for the future, but at the same time narrows down with what reality is. So do not think budget is always an actual. Sometimes you budget for things that you don't have, right? And then in reality, you also budget for things that you want to get, and then you know the amount of money that you have. So budgeting, just because you don't have the money, doesn't mean that you can't budget. Depending on the business that you're doing, sometimes you can budget 2 or 3 years in advance, telling yourself that first year, I'm going to spend this. Second year, I increase it by 10%. The third year, another 10 or 20%, based off of real data that you're collecting. But the most important thing is budget is just a plan, but it's a financial plan of spending money and earning money. That's all budget is. Literally, I intend to spend this over this particular time, how much I'm going to spend on this particular product or object or item in this particular week or month or day. This is how much I'm spending on it. And then I'm also budgeting that I can earn, revenue on it this month, this week from this kind of particular sources in terms of services that I render, right? So that's what budgeting is really doing. It's giving you a clarity of what you intend to spend and what you hope to get, literally. So the importance of budgeting here is it gives you financial control and stability. So it helps you track income and expenses and then preventing any overspending, right? And then improve your cash flow management and all of these other things. Again, that also helps you make better decisions, funny enough. And it aligns everything with your, what do you call it? Your business goals, because everything else that you want to track, everything else that you want to spend, budgeting is something that you have to do, right? And then it also helps you with supporting your funding opportunities and everything else, because when you budget, you know exactly how much investment you need for your business. So it's literally see how financial management, the importance of it, and then importance of budgeting does exactly the same thing, because they allow you to plan better in terms of your income and your outgoings. Then identify any expenses that you need to either optimize or just break down. It gives you financial clarity so you can make better decisions, because why are you spending this thing at this particular time, or when do you intend to spend it? It gives you that clarity. It will help you set realistic goals because you can match your budget according to your activities or your marketing activities at a particular time, and then track those expenses to make sure that everything works, right? So then you see the importance of budgeting in that sense. Now, in budgeting, this is where everything just kind of gets all over the place, right? So I will play the video first, and then we'll talk about the twins, as I call them, revenue and income, and then we'll see the difference between the two, okay?
Hi everyone. Today we are going to understand the difference between revenue and income. I know many of you people think these two are exactly same things, but believe me, they are not. Revenue is the amount of money earned by the company's core business operations, okay, the main primary activity of the business, that is selling products or services. Whereas income is a broad category which includes everything, okay, all the sources of money a company earns or receives. It includes both operating as well as non-operating activities. So let's just take an example to understand this. Let's just say we have Ms. Shruti over here who has a coffee shop. She sells coffee, and whatever money she earns over here, that would be her revenue, the main sales of her cafe, okay? And she also has invested in shares. She has fixed deposit in bank. And let's just say she has an extra room which she has rented out. So from all these sources, she's earning income, dividend income over here, interest income over here, and here rental income. Yeah, so these are non-operating incomes, isn't it, from non-operating activities. So if you combine all these together, yeah, operating plus non-operating, that would be called as total income.
Great. See, so we'll see that revenue actually comes from your main business activities that you partake in, and then income can come from other things that you do that brings you money, right? Because I know some of you entrepreneurs are very smart in terms of, you know, you put money aside, you invest your money, and that money that comes in is that income that you make from that side business. It doesn't come from the main business, it's coming from somewhere else, right? So he's saying revenue, the total amount of money a business earns from its sales of product or services before any expenses are deducted, right? It's also known as the gross sales or top line revenue because it appears at the top of your income statement. So its positioning literally gives it the name top line. So the formula that you use here would be your revenue equals your price per unit times the number of units sold, right? See, so if I'm selling something for 10 cedis, but then I sell 100 of them, that means I've got 1,000 cedis. It doesn't mean that that's profit. It just means that I've got 1,000 cedis. So in this case, it says that it represents the total earnings before any cost is being, you subtract any cost from it. So it's literally, if I'm selling A for this amount of money, but then I sold X amount of A, then literally times those together, and that's all you've got, right? It does not account for expenses, taxes, or any deductions whatsoever. See, so this is where a lot of entrepreneurs, we kind of sometimes mess things up. So you go and sell, let's say you're selling products, and for some reason, great, God helped you, and you're selling products at 100 cities each, and you were lucky, you sold, let's say, 1,000 of them. Then you say, oh, I'm profitable by 100,000 cities. No, that's revenue. That's not profit, because you've not taken care of paying, government day taxes. You've not taken care of expenses that you need to remove from there. You've not taken care of, any other deductions in terms of salary, rent, and all of these other things. So do not go and scream profit when you haven't done that yet. That's just revenue, money that just came in from your product or services. Okay. So then we'll look at what income is in this case. So then it's telling you income here is income, often referred to as net income or profit, is the amount of money left after deducting all your expenses from your revenue, right? It then represents actual earnings a business keeps. So the formula here will be revenue minus all expenses. So from your cost of goods, sales, and then you look at your operating costs, you look at your tax, you look at interest, all of those. The income here then would then show you how much money the business actually make, as in its profiting here. Includes deductions for operating costs, salaries, rent, taxes, name it. Then you see how revenue was called the top line, but then income is called the bottom line, right? Because it appears at the bottom of your income statement. So in this case, an example, the revenue you made was 50,000, but your total expenses was 30,000, right? Including the cost of goods, sales, and everything else, including your rent and all of that. So now for us to figure out the income that we've made, we're looking at minus the 50,000 from the 30,000, then we go 20,000. So right now we're holding 20,000. So imagine you made 50K, but suddenly when you take everything out, you've made 20K. So in reality, you have 20K. You didn't have 50K, you have 20K. So this is where you need to be very careful. Until you minus everything, all your expenses, you can't say you have this amount of income, okay? Now, before we go to the variable cost and thing, let me come back so that we can have a brief conversation. Anybody can speak at this time to let me know if it's clearer to them or if there's any point that I need to go over.
Hello, Josiah.
Yes.
Okay. So there's a question concerning the budget. We speak of budgeting, we speak of financial planning, and we also talk about financial forecasting.
Yeah.
Looking at all these three concepts, are these moving parts, or we can say that financial planning and financial forecasting are moving parts that come together to make up the budget vehicle, or budgeting, financial planning, and financial forecasting are three different moving parts that will make up a different vehicle altogether. I just want to understand those discrepancies.
Okay, so repeat that question again so that I make sure that I get it.
Okay, so I'm asking that you made mention of budgeting, and you also made mention of, okay, financial planning. I also know of financial forecasting. I just want to understand whether financial planning and financial forecasting are under the umbrella of budgeting, or they are on their own. Let's say they are moving parts together that make up a different vehicle altogether, or they are under the budget umbrella. I just want to understand that.
Okay, see, so from a layman point of view, in terms of somebody that's not an account, I will say they are under the umbrella of budgeting, but then that's the moving part, right? Because even from a business point of view, you need to budget, let's say, for a whole year and all of these other things. But then in that, you're looking at how are we going to plan? So when you look at financial planning, so let's say look at it from, you want to create a particular product, for example. What is the financial plan that goes around this particular product? So then you break that down and say, okay, this is how much we're going to spend. This is what we're going to do to then do this. Then the financial management part of it is keeping all the records and using it to either go get a loan and all of those other things. So either way, the budget fits into all of those things, but you have to budget first before you can do anything else. So for me, I would say the budget becomes like the overarching things and everything else comes underneath it, because first we have to have a budget before we can make a plan. Then we can manage it, right? But then in the management, for us to then go and purchase something, we also need to create a budget. So it's not exclusive of or inclusive of. It's just that we know we have to do a budget first and then plan everything else that we need to do. So even if we intend to, let's say, go and buy a particular building, for example, yes, you create a financial plan for that, but in that is still budgeting included anyway. So they all join together one way or the other. I hope that answered your question.
Okay, so if I should get it right, it means that the financial forecasting is basically falling under the budgeting bit.
Yeah. So it's okay. So the forecasting itself is like you're using it to tell a story, right? So you need to budget to tell the story.
Okay, that explains that.
Right. So you're using the figures that you've budgeted to then derive that story.
Okay, that explains that.
Does that make sense?
Yeah, it makes a lot of sense. Thank you.
All right. So thanks for that question. I hope that also helps some clarity for other people in that sense, because it's something that we need to know. So, because again, if we're going to manage something, we need to plan it first. So the budget helps us plan it. And then if we're going to then forecast something, we need to have it on paper then to predict, use that data to say, okay, from these figures that we've seen, this is what we think could come out of it, but it will still be something that we need to do anyway. See, so thanks for that question. And then if we have an accountant here that can drill deeper into that clarity, we welcome that as well. Because again, for me, I'm a purely operational person that understands financial literacy and management, but you have accountants here that, they understand the nuances in that sense. So if you have anybody here that understands the deeper nuances that want to add to it, please feel free to add to it. Okay, great. So let's go back. So now, this fixed cost and variable cost, right? Before I play the video, basically your fixed costs and expenses, they will remain constant regardless of your business activities. Examples being salaries, rent, insurance, utilities, and software subscriptions. And again, let me speak in context. Yes, in Ghana, we pay 3 years advance rent and all of these other things. So depending on the time frame that you have your fixed costs for, they remain fixed, okay? Some of the utilities in Africa generally will be moved to variable costs, because just out of nowhere, you find out that, water rates has gone up, electricity can go up, but general things like software subscriptions and stuff, if you pay for it every month, is usually the same. If you subscribe to, let's say, Google Docs or, Notion or, ChatGPT and all of these other things, you subscribe on a monthly basis or even pay on an annual basis. So they stay the same. So then it's fixed. Salaries tend to stay the same, at least for a year or two, it's fixed. Insurance, you pay for it, it's fixed. Utilities, there's some sort of movement in there, depending on what, country you're from. But generally speaking, because we are speaking from an African context, utilities can also dive in between the two, right? And then when you look at variable costs, these are costs that literally go up and down, depending on your business operations or your sales volume so whether it's raw materials, whether it's shipping, whether it's the marketing and the commissions that you have to pay. Because sometimes when you think about commission, you might pay, somebody 10% if they do X, and then they will do more than that. So that means you have to pay them more, or sometimes you have to pay somebody more in order for them to then achieve a particular results for you. Raw materials, those of you that are engaged in the raw material space, let's just take shea butter, for example. we all know that it goes up and down, because acquire them, you might bring them all the way down from Tamale, for example. And because of the logistics movements of it, or the seasonal version of it, so then they'll tell you, oh, it's costing more because we have to bring it from A to B. All of those things are the reason why it's variable, because it changes over time. It doesn't stay the same over a period of time. It just keeps changing. So those variable costs are very hard to budget for. So usually most accountants will advise any entrepreneur to have miscellaneous space in their budget, so then it kind of makes way for some of these variable costs, so that when things go up by 5 or 10 or 2%, you don't cry too much about it, because you've made that miscellaneous funds for that. So let's just hear from the lady what the difference between the two is.
What are the differences between fixed versus variable costs in business? Fixed costs are expenses that don't change regardless of the activity level of the business. So this includes things like rent, salaries, insurance, loan repayments, and utilities. Variable costs are expenses that do change depending on your product or service output, such as payment processing fees, raw materials, delivery costs, packaging, commission. Let's say you've got an e-commerce business selling clothing. Your fixed costs could be your rent, machinery lease, employee salaries, and insurance. Your variable costs might be supply staff during busy periods, cost of fabrics and printing materials, and your payment processing fees.
Right. So as you can see, this is the basic level, the difference between the two. One stays constant for a period of time, and one keeps changing all the time. Okay, so bear that in mind. And then again, once you try to do your budgeting, you need to know which one is the fixed cost and which one is the variable cost. So it's something that you definitely have to bear in mind when you're doing your budgeting exercises that we're going to do very soon. Now, then you have your cash flow projections, right? So this is the things that will estimate money coming in and going out over a period of time. It helps you secure the business, to ensure that the business maintains enough cash to cover expenses, right? So this is a cash flow projection. We're going to spend this, or we're going to make this, ideally, right? So in a week, we're going to spend this amount of money, or in a week, this amount of money is coming in. So then that what goes out, what goes in over a period of time. It then enables you to then maintain enough cash to cover expenses. So you will know whether you have enough cash or not, right? Then you need to have emergency plans, because these things happen. It sets savings aside for unexpected expenses, or times when revenue periods are slow. You need that, funds for you to be able to do that. So you need to also show that in your budget that you have a contingency plan for that to happen. And then it helps you manage your risk and any financial uncertainty that might happen. The idea is you have something as a backup financially for that. So that's something that you also need to think about when you're doing your budgeting in that sense. So then we're saying the breakdown again. Debt repayment plan. If you owe any loans, interest payments, and credit obligations, that goes under your budget. You put that as debt repayment plan. That's the header under your budget, right? What does that do? Then it ensures that financial obligations are met without any cash flow issues. So you have to put it there. As much as it's painful to see the money going to be used to pay for somebody, it helps you know what your cash flow situation is at a particular time, because you have to pay things, so you're not hiding it from yourself. And naturally, you look at investment, any growth plans, funds allocated for business expansion, marketing, new equipment, or hiring. Again, that has to show itself on your budget plan, so that we know that, okay, on this line, we've put investment and growth plan. This is the money that we're going to use it for. What are we going to use it for? For marketing? What are we using for business expansion, to get a new equipment, any for hiring? We need to budget for all of those things. Now, here's the two things that always gets in the way. we talk about the gross profit, right? So what is, when you look at those two, you think that is the amount of money a business makes after deducting the cost of goods sold before making any subtracting any other expenses, right? So again, the gross profit here is revenue minus your cost of goods sold, right? So this allows you to measure your profit from core business operations. Does not include what do you call it? Operation expenses, the tax and interest payment, and it helps you determine if your production costs are everything else are under control, right? So again, here is where we see it, and it's similar to what you saw with your revenue being. So the gross is this overall profit that you've made, but then how do you look at it? You take the revenue, then your cost of goods sold, then you get your overall gross profit. That's cool. But then when you look at your net profit here tells you that is the final profit after deducting all your expenses, including operational costs, your taxes, your interest, and other overhead costs. So the formula for that would be the gross, the first one that we talked about, minus your operations, minus your taxes, and then any interest. So again, it helps you measure your overall financial health for your business, including all the costs in terms of rent, salaries, and everything else, and then determines how much money you actually get to keep. So the example again being, if you have 30K as a gross, your operating cost is 10K, then your taxes is 5K. All you have to do is just take the 30K that you have, take 10K from it, take 5K from it. So what you have now is 15K. Now that 15K is actual net profit that you have at the end when you've done everything that you need to do, okay? Now, the key differences between the two, so it's telling you that when you look at definition, gross profit will be profit after deducting all your cost of goods sold. So goods that you sold, you just literally deducting that. Then your net profit will be profit after all your expenses, includes, so for gross profit, this will include only direct production costs, nothing else. Direct production costs, nothing else. Whereas the net profit would include your operational costs, your taxes, your interest, and any other thing. So any other thing that you have to put down, make sure that you taken out of your business, you have to factor that in, right? Then what does gross profit measure? It measures business operational efficiency. But then your net profit measures your overall financial health, right? So you have to, let me repeat that. What the gross profit will measure will be your business operational efficiency. Again, basic, at the basic level, have we made money? Okay. But then net profit will measure overall financial health, like where are we financially, right? Then what gross profit would then indicate is if the business can actually produce, is it profitable? So what we selling, are people buying it at the price that we selling it at? That's great. Whereas the net profit would then measure if the business is truly profitable, right? See, so one is saying that if what we produce is profitable, that is different from if we're truly profitable. So one is saying that we produced this bottle and we sold it. Oh, great. We've made money out of it. But the other one is saying that after we pay for everything in this building, everything, our landlords, taxes, all of those, we've made money at the end, we are truly profitable. So it's saying that the gross profit shows how well a business manages production cost, whereas the net profit is the real profit after all expenses, showing if the business is actually making money. So please, that's why I put it in red. Always track both to understand your business profitability. So let's go back to, because I know this is loaded information, so let's go back to the chat and then I would ask questions so who wants to go first, or before I just nominate anybody? Okay, So since nobody's putting their hand up, Felix, are you there? I like it when I see people online, but they're quiet.
Hello.
Yeah, hi, Felix.
Okay, sir. Good evening.
Good evening. How are you?
I'm fine, my God's grace. And you, please?
I'm doing well, thank you. So what did you learn?
I learned about the gross profit and then the net profit. So the little I've been able to gather is that with gross profits, after you've sold your products, you're able to check after production, you're able to check whether people are able to buy the product or not. That is a little about gross profit. And then the net profit is after sales and everything, have I been able to make some personal gains?
Mm-hmm.
Yes, I think that is one thing I've also gathered from there.
That's great. And I hope that made it something a little bit clearer for you. Or is the whole thing making things clearer for you already?
I'm making sense out.
Good. Okay, that's good to hear.
Thank you.
Sylvia. Yes, Sylvia.
Yeah, yes, sir. I
Yes.
actually had my hand up way back when you were helping us to understand fixed and variable costs.
Mm-hmm.
I don't know if I can still go ahead with my question.
Yes.
Okay. So I understand that variable costs are, let's say, items, for less of a better word, that change. You have probably no control over, kind of.
Yeah.
And then the fixed cost refers to maybe items that remain the same over a long period of time. But then I want to ask that, to what extent of time do you refer to an item as fixed, as a fixed cost? Is it when it remains unchanged up to a year or 2 or 3 years? That's what I want to understand, please.
Right. Okay. So that's an excellent question. So basically, I would say from an operational point of view, rather than from a financial point of view, in terms of, let's say, with Ghana, when you pay your rent, you pay it over 2 years advance. So in this case, it stays fixed for the 2 years that you have it fixed for. Then in your contract, your landlord tells you that after the 2 years, it would increase. So if you're building your budget for just 2 years, that means that the period of time that you're building the budget for, that's where the fixed cost needs to be. In terms of salary, for example, if you employ people, you do your salary in a way that, okay, for the next 12 months, I'm paying you, let's say, 50,000 Ghana cedis. So that's fixed, right? If we need to talk about salary increments a year after, then when we come to do our budget, whatever amount that we agree for the year, it becomes fixed. So basically, your fixed cost can be a situation where it's based on the period of time where it's fixed for. So some people, their fixed cost can be 6 months because of the contract that I've signed with somebody for the next 6 months in my budget. That is the fixed cost. It wouldn't change for the next 6 months. Whereas the variable cost will change on a daily basis or a weekly basis, or typically in Ghana, at my office, we buy water, right? One day the people came, and in my mind, I've budgeted for 140. They told me it's 180. Then the following week, they come and it says 200. It changes. Whereas the salary for my staff hasn't changed for a year. The rent hasn't changed for a year or 2 years. So then that's how you see it. So Sylvia, I hope that answered your question.
Yes, it does. It does. Thanks a lot. So in other words, that means what may be a fixed cost to me may be different for another business.
Yes. Yeah,
Okay.
it's not it's not set in stone at all.
Okay, thank you so much.
You're welcome. Ephraim.
I think Sylvia was in my mind. Yeah, I was going to ask the same question regards to the cadence on the fixed cost. So which cadence we use to consider something as a fixed cost and a variable cost? And I think we explained that, also saying that it's subjective to the individual as well, looking at the environment you are in. So thank you for that. I appreciate it. Yeah.
Yeah, hello.
Mhm.
Can I please ask a question?
Yes.
Yeah, be careful and for an advice for the youth. Can I say some for the advice for the youth? And be how do you say, be reasonable for the price. And when you're purchasing an item, you have to be more reasonable for the item. If the item is in supply or demand, you have to be reasonable. You have to make some analysis and make a decision. You get it?
Yeah. So you're right, because sometimes it depends on the industry that you're in, right? Some industries, things you have to be reasonable, be able to bargain very well. So for young people that go into business, think about these things, right? Be reasonable when you spend your money. So thank you for that question. And again, to further push the statement and the question that Sylvia and Ephraim touched on, because sometimes you can have hybrid cost, and hybrid cost is like a blend of the two, right? Where it's something is semi-variable and also fixed cost at the same time. Okay, it can happen. Utility bills can be fixed based on the charge itself, but then the fees that goes with it can vary. Because sometimes you might find that ECG might do something where to repair certain part of the meter is fixed, but then the fee to do certain things will vary. So then they blend. Or you can have salaries where the salary itself is fixed, but then if you have bonuses and commissions, then that's a variable. But then you see how they become a hybrid. So then you're paying somebody and then you tell the person, I'm paying you, let's say, 4,000 Ghana cedis a month. But then at the end of the year, we'll give you a bonus, then also 10% on any commission that you bring at the end of the month. So you see how the commissions and the bonuses and the salary becomes a hybrid of the two. So it's never set in stone and say, okay, this is what you need to do. There is always a way around doing it. But the most important thing is always make sure that you understand what is fixed and what is a variable cost in that sense. And because whether there's a change or not, you can balance it. So most people that really should be looking at variable cost, the people like in the restaurant sector, because again, tomatoes, goods, and all of these other ingredients always keep going up or down, so you can't really figure it out. When you're in the e-commerce space, so you'll find out that your business domain registration is fixed because you pay for it across the year, so that's fixed. But then the subcontract fees that you have to pay, logistics, delivery, and all that can go up and down, right? So then you see that you're doing a mixture of all of these things. So know in your industry what is fixed and what isn't, right? Consultancy firms, again, you will find that the contract that you sign and all of these things can vary, but then your fixed cost will be the rent or any software that you paid for you to be able to use your things. So always know that you're going to have a possibility of fixed or hybrid. Just keep that in mind. How?
Hello. Please, I think you already answered my question. That's why I lowered my hand back.
Okay,
Thank
great.
you.
Great. Let me see if there's anybody else. Okay, let me go back to the slide. Right. So now we know some of the key differences. So make sure whenever you get money, before you celebrate, ask yourself, profit, the gross profit, and then the net profit. So let me just break it down for
Hello,
you again.
Joy.
Yes.
Would you mind explaining the point 2? That is, I think operating, yes, includes only direct production costs and then operating costs. I think that area again.
Okay, right. See, so let's say it takes, I'm selling a bottle at 10 cedi, right?
Yes, sir.
Sell 20 of those bottles. So I'm just timesing 10 by 20, right?
Okay.
So in my mind, I've got 200 cedis, right?
Yes, sir.
Good. But then the operation costs, meaning the electricity, the gas, the building that I'm in, the rent that I had to pay, the staff that I had to use to produce that particular bottle, right? And after all that, I had to pay taxes to the government. And then if I have any bank loans and everything else that I have to pay, how much is that costing me? So let's just say that costs me the operational cost. So to run my whole business, right, cost me 150 cedis. So now I'm looking at, I sold a bottle, 20 bottles times 10, and I made 200 cedis. But then everything that cost me to produce all of those things and to run my business is costing me 150. So then I need to minus all of that from any money that I have before I will know I have actual money. Does that make sense?
Yes, sir.
So one is looking at the cost for a single item, and then one is looking at the cost for everything. Do you get?
Yes.
Hello. Hello, sir.
Yes.
So please, so does packaging fall under direct production or operating costs?
Good question. See, so this is where I love this. So you will put your packaging under the production cost, because if it costs you, let's say, if you bought the bottle for 8 cedi, or let's say the bottle for 5 cedi or whatever, right? And then you put the drink in it, and then you sealed it, and you put it in another box that cost you 10, let's say 3 cedi. Now you put it together, you realize that, okay, so now everything in this, the packaging and the box and the bottle, the packaging and the drinking in it is for 15 cedis. That's everything, right? That's separate. So you have to put the packaging in that, because that's coming together as one, because that's the unit that you're selling. Everything that goes around the unit is included in the cost of the unit. So the packaging is also part of it. Does that make sense?
Yes, please. Thank you.
Good. And then, so the operational cost will be the other people that may not have been the people putting the drink in. So you're like your accountant, your social media people, and all of those other things, people that you need to run your business, right? That might not directly be involved in packaging. You also need to factor that you need to pay them. So after you've paid all of them, that's when you have money. You don't have money because you sold 15 bottles. Does that make sense?
No.
Shall I clarify that? Hello?
Hello.
Yeah. Did it make sense, or you want me to clarify that again?
No, that's very fine. Makes sense.
Okay.
Thank you.
Cool. See, so look at it, your gross profit as an encouragement figure, really encouragement figure to say, oh, people will buy my product. But then look at the net profit as a reality figure that tells you that this is where I'm actually at. See, so you sold the bottles, it encourages you, yes. But then in reality, did we make money out of it? So one is reality, one is much more encouraging in that sense. And I'm only using these words from an operational point of view rather than from a financial accountant point of view. So cash flow management. Now, what is cash flow management? It's just telling you this effective cash flow management ensures that a business has enough cash to cover its expenses invest in growth, and then remain financially stable. Because sometimes you could be making money, but our expenses are too high. We can't even invest in the growth of the business, meaning we can't scale, we can't, open new stores, we can't get new equipments, we can't hire new people, we can't increase salaries and all of those other stuff, right? Because we're not managing our cash properly. And then that's in turn, it will not make us financially stable. So when you look at cash flow, look at it as in negative and positive. So positive means more money coming in than what is going out is positive. And then negative is more money going out than what is coming in. That is negative, which can then lead to financial trouble. So a good cash flow management ensures that a business can pay its bills, invest in growth, and stay financially stable. Therefore, you have to monitor your cash inflows and outflows on a regular basis. That helps you avoid any cash shortages and then improves any decision making that you need to have. So just because you're making money, but your expenses are high, and then you have to keep borrowing money all the time, it's a problem, because what is going out is more than what is coming in. We need to figure out what it is that we need to do to make it better, okay? So the components of a cash flow management: cash flows in, that will be your receipts, so all the money that is coming into the business. Cash flow out, that will be your expenses, or the money that is leaving the business for operational needs, right? Then operating cash flow, which is your OCF, which is the cash guaranteed or used, the cash generated or used in day-to-day business operations. So on your day-to-day business operations, what are you using the money for? That is your operational cash flow. Then cash flow forecasting is to then predicting future cash flows, in and out cash flows, to avoid any pitfalls. So basically, I know that if I'm looking at it, I'm thinking to myself, okay, I can predict that in the next 3 weeks, we can easily make 30,000 coming in. And then looking at the way things are with our expenses and all of those others, I can forecast that for the next 3 weeks, we're going to spend at least 20,000 will go out. So in this case, at least we have 5K in the balance. But then if it happened to be the opposite, then we have a problem. So that's how you have to look at it. So you can use the cash flow to also forecast what can potentially come in and what is going out. So in terms of what can come in, if you do subscription-based businesses, you know that at the end of every month, you have 50 clients that are paying you X. So you predict that if they all pay, this can potentially come in. And then because you have invoices that you have to pay, you know that for the next 3 weeks, you owe all of these people standing invoices, so then you have to pay. So then all of these things are things that you have to think about, right? Then he's saying working capital management. So ensures that short-term assets like cash, accounts receivables, short-term liabilities, and paying for your debts and all of those other stuff. So then, so short-term assets are things like cash and accounts that are receivable, right? Things that you definitely know you're going to get. Then you look at your short-term liabilities, so payables and then debts and everything else that is over your head. You have to think about how you're going to pay for those. Then from the financing and investment decisions, the components of your cash flow management would then help you manage external funds, whether it's loans, equity, investment, that then will end up affecting your cash flow. So you have to have a cash flow management system, because it allows you to know what goes in, what goes out, what you need to run on things on a daily basis. You will know what is for short-term assets, and then your short-term liabilities, and then also be able to predict any future inflows and outflows of your business. So having that system for cash flow management is important, right? So usually what we do is we run a masterclass on most of the sessions, and to save your spot is really 150 cities, really. We do both online and in person. And with this one, if you're interested, you bring your business. If it's at the moment you don't have a budget, we can sit together, tell you how to do the budget for your business. So a lot of the information will be asked. If you have finances already, we'll then work certain formulas to let you know where you are right now for you to be able to determine your profit and loss and all of these other margins that you have to look at, the units and how much you're selling things for, and how much are you getting in, how much you're getting out, is it balancing, and all of these other things. So literally sitting down with you for the practical side. So you have to, if you're interested in it, you bring your business, you say, this is what I do, this is how much I sell, this is how much it's costing me, and then we'll help you kind of fine tune certain things in your business, whether it is to ensure that your supplier's agreement is favorable for you, right? Are you paying your invoices every day, or can you have a 30-day cycle to pay all your suppliers? All of those things are helping you, enable you to budget so that you can be in a better financial position, right? So in that said, joining the class, you will learn to separate your personal and your business finances, hopefully for sustainability, and then learn the 3 key financial statements. You're definitely going to learn your balance sheets and all of these income statements and all of that kind of stuff, and how they impact your business, budgeting and pricing strategies to maximize any profitabilities that you have to think about, and then real cash flow management techniques to help you keep your business running. Then obviously the normal common financial pitfalls and how to avoid them. Then any practical exercises that we're going to engage in, and then we're also going to give you case studies for you to apply this financial literacy in real time. So yeah, so it's something that you're interested in, please get in touch with Madeline, and then that can be arranged. And based off of that, we will know where you are in terms of your financial literacy. Any systems that you need to put in place, we will advise for you to then put in place. But then the accounting side of the auditing, that is a different thing altogether. That is in-depth scrutiny when it comes to your finance. But this is going to be at a surface level, give you all the structures and everything else that you need going forward to know why you need to budget, what are you budgeting for, check your cash flow, ins and outs, and then know where your profit, net profit and gross profit and everything else is coming from. And then what your revenues are, and your fixed cost and variable cost. That's what this particular masterclass will end up looking like. So with that said, Mercy, these are the details in terms of phone number, the email, the location for our offices in East Legon, and then you can also check us online. So with that said, let me go back into the chat space, and then any final suggestions, any questions that anybody has? I think Pearl got a hand up. Yeah, Pearl.
Hello.
Yes.
Yeah, thanks for the knowledge you just shared. I want to ask a question. It's two.
Yeah.
Yeah, as an entrepreneur, creating an emergency reserve for your business, will you advise that we go to insurance or bank investments like treasury bills?
Yep. I am the wrong person. You know why? So when it comes to investment, because of it depends on what it is. If you're doing short-term investment, so you need to, I would say, invest in things that the moment you need your money, you'll be able to just pull it back out into your business. So I wouldn't say go and invest in, let's say, real estate, right? Mainly because if it's real estate, then when you need your money right now, you won't be able to do it. So you can do like fixed deposits and all of these kind of things. And most fixed deposits will probably be for like 3 months, 6 or a year or whatever. But the most important thing, or you could do those rollovers where so every 3 months they reinvest your money. Just invest in, if it's your business money that you're playing around with, I would say invest in products that allows you to get access to your money as quickly as possible, as easy as possible. Nothing more than 3 months, because if your business needs money right now, you should be able to get access to your funds. So I would say do the fixed deposits that they could do rollovers every 3 months or so. If you want to do the bonds and stuff, again, how long the bonds are for is important, but do not go and do real estate with your business investment, because with that one, it's going into bricks and mortar. You have to then find somebody that will buy the house before you make your money. So if it's business money that you're going to invest, then do, quick fixed deposits that's easy to understand. You put your money within, you can get easy access to your money without too many penalties, as easy as possible, so that you don't become unstuck when you need to then pull your money to do something. Pearl, did I answer your question?
Yes, please.
Okay.
But I
cool.
wanted it in an aspect of creating the contingency fund for the business. Yes. But I think it's okay.
Right.
So the second question is, okay, you can go ahead.
No, go ahead. I'm listening.
Okay, so the second question is, as an entrepreneur, do you pay yourself, do you put yourself on salary so that you will be able to help your business grow, or after gaining your net profit, you take it as your salary?
Good question. I would say pay yourself every month, no matter how small it is, right? Because what is going to happen is, if you don't pay yourself on a monthly basis, no matter how small it is, you would start using your own personal expenses whilst you run your business. And then when you get your profit, God willing, at the end of the year, let's say your profit was 30,000, but then you then went back and checked all your expenses and thinking, oh, wait, I've put 15,000 into the business, so I'm going to remove my money straight away. That means your business is now down 15,000. So your profit wasn't 15,000 because you did not include your personal expenses that you did put. So it means your actual profit now is 15,000. It's not 30,000. So I would definitely tell every single entrepreneur here, pay yourself on a regular basis, no matter how small it is, because then it keeps you track. It helps you track all your expenses in real time, so that you're not able to mix your personal money with your business money. So yes, please pay yourself before profit. Do not wait until everything else is paid for before. Otherwise, you would then dive into your personal expenses, using it off for business, and then charge yourself later. Does that answer your question?
Yes, please. Thank you.
You're welcome.
Hello.
Yeah, hi. How are you?
Please, the masterclass, is it going to be in person or online?
There is some, what do you call it, the hybrid. So they could be in person and online as well. With finances, it would need to be in person, if you can. But there's the hybrid. So if you there's an online version, so you can also participate online.
Okay, that's fine. Thank you.
Also, I want to ask.
A question.
Hello.
Yeah.
Okay. Okay, I want to ask. Apart from the 14th, which is the financial literacy class, is there any other class again? Forex, another day for class?
Okay, so based off of if people show interest and the time and date is favorable for most people, then we would do it like that. But if somebody wants a class personally on a different day, they can also reach out, and then we're able to facilitate that. So it's very flexible.
Okay, please. Because on the 4th, if I really want to join, but the 14th, I'll be a bit busy because of the nature of my work.
Okay, fair enough. Yeah, so we
you.
can break another day.
Okay, please. Thank you.
Hello.
Yes, hi.
Good evening.
Good evening.
Yeah, please, I want to ask, what are the best investment plan for an entrepreneur?
The best investment plan for an entrepreneur. Why would an entrepreneur be doing investment plan? Shouldn't they be investing in their own business?
Okay.
Right? You're supposed to put the money into your business,
Wait.
and it depends, to get customers really. But then when it comes to investment, like I said, investments that's not financial management. Does that make sense? Because that's a different arm of finances altogether. See, so what I can do is, what I can do for you is you can reach out to me. Let me put my email address here. Hold on.
Okay.
I'll put my email address here. Yeah, this is my email address. Reach out to me and then let me know what kind of investment that you're looking for, because investments is a blanket word that people generally use. Are you looking for businesses
Okay.
you can invest your money in, or are you looking for like bank investments that you can invest in? You see what I mean? So investment
Yeah.
can mean different things. It can mean that you have
Yeah, okay,
money.
it's broad.
Right. So you're thinking maybe you have money as an entrepreneur, what sector should you go in? Then I can turn around and say, well, investing in agri-tech startups can be great, or investing in a fintech can be great as an entrepreneur, right?
Oh, okay.
Or if you give your money to, let's say, GT Bank or StanChat or any of those, they can invest in government bonds or whatever. So you reach out to me and let me know exactly what you mean or what you want to do, and then I can
Okay,
point you.
I will do that.
Yeah.
And
Hello.
so, yeah,
Hello.
Thank you.
yes, go on.
Hello.
Please.
Yes, it's
Hello. Hello.
Oh.
Yes, Dela, I can hear you.
Yeah. Good evening. Please, I have a business idea, but the problem is I don't have investors about a gaming industry. I wanted to create a game, but the problem is I don't have investors that could invest in the game industry.
Right. Okay. See, so again, this is my email is there. Reach out to me. And have you built the game yourself already?
Game. I have the idea of the game, but I don't know how to build it. So I'm now learning how to build it.
That means that you don't need investments at the moment. What you need is you first need to acquire the skill to build the game. Then
Okay.
I ask you what you need investment for. It's good that we're online because this is good for people. What do you need the investment for?
So for the game, for the game, a game
Right.
for the investment.
How much you need the money? How much money do you need?
No, I can't tell. It depends on the game I create.
Exactly. You see, so when you say you need investors for a game, I just asked you how much money you need. You see, you're not able to tell me because even the investment for the game, but then once I give you the money for the game, then what happens for recruiting? What happened for marketing? What happened for to buying the license for the game? Do you own the copyright for the game? So when we have ideas, we first have to then ask ourselves, what do we need the money for first before we think about investment? Does that make sense?
Yes, please.
Okay. Hello.
Yes.
Please, I'd want to know how much what percentage of profit would you have advised that we put back into the business, like plow back into the business, and what percentage should we award ourselves as salaries, as you advised earlier that we should pay ourselves at least on a monthly basis?
Right. See, so in terms of reinvesting, I like the fact that you as an entrepreneur have the mindset of reinvesting into your business. And this is a case by case basis. It's not a generic thing. So I will always say that depending on how you've done your budget. So let's say if you had a budget and you budget everything, forecasted everything for the next 5 years or 3 years, let's just make it 3 years. But then, so you have the money in the bank already for the next 3 years, everything is fine. But then in the first year, you made, 60,000 Ghana cedis profit. I would then say, put probably like 30% of that into an emergency fund, right? So that leaves 70%. The 70% would then either be reinvested into the businesses. So you looking at your revenue, you would then sit down with your team and then ask yourself, okay, now we got 70% to reinvest into the business, right? Where or which areas did we make the most impact, where we made most money? So then they can say, okay, we need, after this 70%, we're going to then look at putting 50% out of the 70% into production, marketing, branding, and all of those. And then the 20% that is left, we will use it to increase the salaries of our staff so that they can be much more productive and loyal to us. Why am I saying that? Because you realize that your fixed cost, which is your rent and all of those things are already fixed. So you pay for them 3 years in advance. So you don't have to worry about that. Then your variable cost, because of the 50% now that you hold, you're then able to put some money aside for your variable cost. So in this case, 30% of your profit, you've saved it. So that's fine. But you've invested a majority of the money back into the most effective and operational part of your business. So I would say save at least 30%, particularly if you have a budget that is taken care of for the next 3 years. If you don't have a budget that is taken care of for the next 3 years, that means that you have to literally almost put all the money in. But I will say, I would advise you to at least save 10% of that. So if you have 60K, save 6K in the bank for emergency, and always save money that allows you to run your business in case the worst case things happen. At least you have money to run your business for the next 3 months. So always work out how much money do you need for the next 3 months. If you don't have money, you don't have resources, you don't have revenue at all for the next 3 months, how much money can you save to run your business for the next 3 months? So whatever you save, at least it should run your business for the next 3 months. If you can do that, then save it. If you can't do that, then you need to find another way to do it. So that's how I work it out personally, but then you can use your own numbers. So you can use it according to your budget and the figures that you have and then reality that you're facing on ground. But I also welcome any advice from anybody else that is on the call right now. And I hope what I said made sense to, I think it was Pearl that asked that question, correct?
No, it's me, Hawa.
Hawa, okay.
Yeah.
Hawa, did it make sense to you?
Yeah.
Okay, great. And yes, so Felix made a point about he ended up consuming his startup
Yes,
capital.
please. Yes, it did. Thank you.
Okay, great. And Felix, yeah, I mean, your point is great because sometimes you end up consuming your startup capital and then you have to go get extra funds and all of those other things. So it's one of those things that you have to ensure that you do not mix your personal money with your business money, because you end up spending your personal money or your startup money and then you think it's your personal money, because when you see 100,000 cedis in your bank account, you think you've arrived, you think it's your money. Yeah, you're the CEO, you're the founder of the business, but it's not your money, it's business money. So how much are you paying yourself in that 100,000? So even if you decide to pay yourself 50,000 out of the 100,000, that is your problem. The most important thing is you're paying yourself, right? But in this case, make sure that you have enough money to run your business. Ephraim.
Okay. So just want your advice on this. With regards to financial forecasting as a business. So it could be an early stage startup or it could be an established business, but I just want to understand. With regards to forecasting, what's your advice on forward forecasting and reverse forecasting? And is it advisable as an entity to have those two forecasts in place, or you should only rely on one? Because I mean, forward forecasting is straightforward. You know what you're about and all that. By reverse forecasting, you have already planned, but you're working backwards to achieve those objectives that you put in place or those plans you put in place. So what's your advice with regards to these two concepts?
See, okay, so when you look at forward forecasting, that is almost proactive, right? So you are then thinking to yourself, okay, it's a method in which you're using to predict the future, so to speak, right? So then everything is based on, I would say, current data that you have, or any historical trends that you might see in the market that you probably use for predicting growth. So then but when you look at the reverse part of the forecasting, right, where this is more, I would say, goal driven, right? And it's your desire for what you want, a future outcome. you're working backwards. Say that if I achieve this, then this is what is going to happen, right? So you're working backwards. This is something that you want to almost foresee happening, but it's not based on any, I would say, data. That is dangerous. It's not something that I wouldn't say don't do it. It depends on the industry that you're in and how innovative you are as or brave as you are as an entrepreneur. But the forward thinking, because that is more so based on data, you're able to predict or allow yourself to kind of predict an outcome in that sense. Whereas your reverse one doesn't. It's based on a goal, desire. So it is dangerous, but it depends on the industry you're in and the environment that you find yourself in. So again, if I'm in Ghana, for example, I would always advise people to do the forward forecasting, not so much of the reverse, what they call it, forecasting, because reverse being goal driven, you know, is dangerous. It starts with future targets, which you don't have. Whereas the forward is an actual, is data driven, and is based on past performance. So based on your past performance, you are then able to predict the future, so to speak. But with reverse, when you're working backwards, in order for you to achieve a goal, it's all well and good if you know what you're doing and you have, you know, bravery and market trends and you have investment or you have some sort of emergency funds. But if you don't, I will always advise you to do the forward thinking. Ephraim, does that answer your question?
Yeah, you're spot on. Thank you.
Hello.
Yes, hi.
Okay, good evening.
Evening, how are you?
I'm good, thank you. Yeah, thank
No.
you for this evening discussion. Very good. Now my question is, let's say I pay my workers, let's say 1,000 every month.
Mhm.
And then as you were saying that increase in payment normally you normally do that over a year or two. So is it necessary or advisable to wait till a year or two before you increase payment? And then my second question is, for instance, if you want to give bonuses to your workers, how often should that be? Or can you also wait for a year, then you add up to the salary of the worker? Because we all know what comes in place to give bonus to workers. So should we wait, or you can also give that monthly basis? Or how should we go about that for the increase in payment? Should we wait for the year or two? Or the bonuses, should we wait for a year or two, or you can give that monthly because of some of the things that come in play in giving out bonuses? So that's my question.
Okay, so thank you for that question. So in terms of salary increments, you should do that based on review. And most of the time, you should do your review twice a year, if that, or once a year, right? So every twice a year, every 6 months, you can do a review. If the person has done well, you increase the salary. That's fine. So at least you know that your salary cap is fixed for the 6 months. Then the next 6 months, it changes, but then it's still fixed for another 6 months, so you're okay. In terms of bonuses, it depends on the nature of the business that you do, but I will always say at best, do it on a quarterly basis. So every 3 months or so, then you pay them a particular bonus based off of the industry you're in, right? Because remember that if you're in the sales industry where you're a salesperson, you tend to get more commission based. So commission based is something that they pay you every month or so if you're lucky. If you're in the real estate space, if you sell something, then you get your commission based off of what it is that you sell. So if I sell 10 houses today and my business gets all the money today, they need to pay me my commission right now. I'm not waiting for 6 months time, they will hold it and pay me. No. So it depends on the company that you work for. But in terms of salary increments, you can do it either every 6 months, so twice a year or once a year. And then the bonuses, you can also do that either on a quarterly basis or on an annually basis. But then when it comes to commission can be done on a weekly basis, on a monthly basis, or a quarterly basis, but you never really do commission on a yearly basis, because that is not fair to the employee for you to hold their money and at the end of the year pay their commission, because most people get paid a base salary and then they survive on commissions. See, so it depends on what your agreement is with the people. If somebody is on a base salary, let's say 1,000 cedis a month, and they're surviving on the 1,000 cedis, but then you have a commission agreement with them, that means that they need to get paid every single month. The commission needs to be paid every single month. But if they just on a normal salary, then you can have that conversation where you would do a review every 2 months, every 6 months, so twice a year, to review their salary. But then in terms of bonuses, you can do it quarterly or annually. Dave, I think it was David that asked the question. David, did I answer your question?
Yes, I'm all good.
Okay, great. So yeah, thank you, Sylvia, and for the French reply too. I really appreciate it, and really appreciate you or everybody's feedback on this. And again, like I said, all those that asked the questions, if you can reach out if you need any consultancy advice. I'm happy to do that. 30 minutes free sessions with you, both for your business. Ask any questions. I'm happy to engage. I'm so thankful and I appreciate your time today. Like really, I've done a lot of these sessions and I think this has been very engaging, and I've also learned a lot, and engaging people, and looking forward to engaging you. The next one is on the vision, the mission, and the goals of a business. So now you see why we did the finance bit before the mission and vision when we go into it. So please sign up, share the link with your colleagues, friends, and whatnot, and even competitors, because it's good for business to have competition when we release the flyer. And if you're not part of the WhatsApp group, please reach out, either email myself or the business at iSpace.gh.com for them to then put you in the WhatsApp group. But thank you so much for joining the call tonight. And I hope you learned one or two things that is useful, and always reach out for anything, and happy to connect going forward. And Hawal, thank you as well. So have a great night, everyone. If you're going home right now, please get home safely. If you're home already, then we thank God, and looking forward to engaging you soon. C'est bon. Bonne nuit. Thank you, everyone. Have a great evening.
You too. Thank you so much.
Thank you too.